Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I'm a little pissed at Meet Kevin. You know what, Kevin? I thought we signed an agreement that you would pay me $1,000 a month, cash, under the table, in order to stop me from criticizing you. Well, guess what, Kevin? I got my first payment, and it's been a month and a half, and I still haven't been paid yet, boy. So guess what? I'm going to come after your cheeks now. You're going to get it, boy. I'm pissed. Anyway, let's talk about a recent tweet that old Meat Breath Kevin just tweeted. And I'm kind of happy for him. I'm kind of proud of my StepBro because he's finally starting to waken up. To Wild Street. Wild Street. I'm on Wild Street. Now, one thing that concerns me is that he calls himself a dad. Okay, there's nothing wrong with that. Financial analyst. Kevin, you're not a financial analyst. You're a YouTuber. Don't call yourself that. So he says in this tweet 10 hours ago, what a scam. Wall Street price targets are a farce. Really? This proves price targets aren't based on fundamental analysis. You don't say. But are rather a reaction to what the stock has recently done. What a complete joke. Translated, the stock went down, so we're cutting Tesla's price target. Not sure why. So apparently this guy here, Pippa, is that a guy or a chick? Pippa Stevens. Jeffrey has slashed, what's Jeffrey's? Has slashed his price target on shares of La Tesla. Oh, yeah. Oh, yeah. Now, why did they cut the price target? It is hard to isolate factors behind the recent correction from NASDAQ to Twitter financial commitments and China lockdowns, but we are clearly witnessing an uncomfortable pileup of negative news from ratings to polarizing political opinions and ethical questions. The firm's analysts, led by Felipe Hocachoca, wrote in a note to clients. So apparently some clown analysts cut Tesla's price target. And guess what? Kevin really had he calls himself a financial analyst, and he really had no idea that these clowns are just going with the flow. Now, think about what a financial analyst does. Their whole job is to kind of like predict where stocks are going to go. It's a fool's errand. You cannot predict where stocks are going to go in the short term. Now, you may think these analysts have long-term price targets. They don't. Their price targets are usually a year out. Now, if we go on tip ranks, just the tip. Julie, how you doing, by the way? What is a price target? Analysts will often assign price targets to their buy hold, blah, 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 blah. So there's a definition here. They say the best analyst price target measures up recent analysts' 12-month target expectations against the market. Tip ranks data pinpoints the analysts beating the market with their 12-month target expectations. Look, this is stupid, okay? Calling a stock 12 months out is a literal impossible task. That's why most of Wall Street underperforms the indexes, okay? Number one, it's tax inefficient. They're trading in and out of stocks like freaking clowns. And number two, they have career risk. A lot of analysts and people that go off their reports, fund managers, they're nervous because they have to basically consistently perform well. And if they underperform for a year or two, people are going to start selling out of their funds because most investors want short-term gratification. So people get terrified when they see a stock going up massively. Let's say you're a fund manager. You see the stock going up massively like Tesla. And you say to yourself, okay, I know from school, from some basic analysis, that Tesla is massively overvalued. But all these other competitor funds are buying Tesla. And they're outperforming my fund. What do you think that fund manager is going to do? They're going to buy Tesla, okay? And that's probably part of the reason why that stupid stock doesn't die, is all these people buying it. So you go on tip ranks, and just the clownery that they have in here is ridiculous. Let's go look at Workhorse, okay? So Workhorse is this highly unprofitable, ultra garbage, alternative fueling company. I think they make like vans or something. And you can see here Workhorse is currently trading at $6.33. Now, actually, hold on a minute. What is it actually trading at? This thing is like hard to freaking read. Does it say? Oh, yeah. Sorry. It's trading at $2.70. It's like up at the corner there. It's like hiding. It's currently trading at $2.72. Okay. And here are the clown analyst price targets: $3, an average of $6, and a high of $11. Workhorse is a freaking disaster. Let's go look at the financials of Workhorse. Google.com. You pull up Workhorse, and I guarantee you, I bet you they don't even have freaking revenue. Let's see. I'd be shocked if they had revenue. This company's a freaking disaster. This was actually recommended to me by a financial advisor. Okay, they have negative revenue. What does that even mean? I don't understand what that means. This company has negative revenue and a negative gross profit of $131 million. How do you get a price target of $6.88 or $11? And you're an analyst, you got your CFA, you went to Harvard Business. Oh, I'm so smart. I'm so smart. I went to Walton, yes. And you're going to tell me that freaking Workhorse is going to be $11. How do you possibly freaking know that? You worthless doofuses. What other clown stocks are out there? Let's see. Smile Direct Club. Oh, I'm curious to see what analysts have for this one. Oh, come on. Get out of here. I'll sign up. I'll sign up with Google real quick. There we go. So Smile Dick Club is currently trading at $1.42. Oh, and here the analysts, they're saying Smile Direct Club is going to be $2.31 on average and a $4 high. Let's go look at Smile Direct Club and see their amazing financials. How do you know? This is stupid. It's like they just flip freaking coins and they, figure out a price like that. So here you can see Smile Dick Club. They basically have declining revenue every freaking year. They actually have a gross profit. That's shocking. And they have massive losses. Diluted net income available to common stockholders. Negative $313 million burned in the last 12 months. Let's go look at their statement of cash flows. So operating cash flow, they burned $174 million over the last 12 months. In 2021, they burned $141 million. In 2019, they burned $333 million. They're burning money left hand over fist. How do you know where the stock's going to go? These analysts are clowns. It's clowns. So, Kevin, I mean, come on. Don't call yourself a financial analyst, number one. Translate bio. Translated by Google. Dad and financial analyst. Dad and financial analyst. I mean, dude, of course they're not based on fundamental analysis. Fundamental analysis is looking long term. A 12-month price target, according to just the tip ranks, it makes no freaking sense. This whole industry is clownish, okay? I would not go on tip ranks at all and expect to get any reasonable information from there. It's trash. It's complete and utter trash. The whole industry is a joke. Jesus freaking Christ. Let's go look at the comments. Pro the douche. Pro the douche. Tip ranks. Whoa. Don't talk about my StepBro like that. Okay. I believe he still owes me $1,000, but I trust he's gonna pay me. Strongman, you are funny as heck and bring common sense to this BS filled financial. The whole financial world's a big fat joke. It's a massive joke. Seriously. I mean, I don't know how else to say it. Nothing is going to convince me to ever listen to any of these clowns on Wall Street. Small Direct is actually Small Dick Club. Dude, Workhorse, where do they get that price target? $11 from where? You're supposed to be a educated analyst. $11. Okay. Anyway, that's it. What a freaking disaster. Not true. Look at people who recommended Tesla. The bulls have been bulls and the bears have been bears. Yeah, but they change the price targets all the time. There's no, if they put on what they thought the intrinsic value of the stock was, I would understand that. But they're not. They're saying what the stock price is going to be a year from now. How do you really predict that? There's no freaking way. You can't do it. It's impossible. But I would get it if they did intrinsic value. That would make more sense to me. Anyway, that's it. StepBro, you need to waken up, boy. You need to start maxing your tax advantage accounts and buying index funds. You'll thank me one day. Anyway, that's it. Cheers.